Hello, everyone. Happy Sunday. Welcome to our weekly webinar. This is Simon with AvaTrade. A few things about myself. I'm a senior account manager with AvaTrade. This June will be 24 years since I started my trading career. Time went by really, really fast. So I was a prop trader for about 11 years on Wall Street, and then I moved into, as I call, less stressful environment. And I also started to mentor and educate other traders. And I'm very happy to have an opportunity to serve our customers at AvaTrade currently. The agenda of the webinar, and especially for new people, I'll explain. We go through a little bit of fundamentals, then we go into technicals through indices, stocks, commodities, Forex. We try to make the plan, as I like to say, as traders like to say, you plan your trade and then you trade your plan, and that's pretty much removes, or at least partially removes, any chaos from your trading. As you have a plan, you stick to it, and that's pretty much is the purpose of this webinar, to go through things, trying to understand what happened, what is waiting for us in upcoming trading week, and make a little bit of a plan. Risk warning, you can find a full statement at avatrade.com website. Of course, what we do here is purely educational. We do not suggest any trades. These are the channels of AvaTrade that I highly recommend for you to subscribe to. You have Telegram, you have Twitter, or it's X called these days. And as I always like to say, my favorite YouTube channel, where you have daily updates and uploads of a lot of information. You have tutorials, you have a lot of educational material, and the webinars that we do are being recorded and posted here. So there's a chance that you are watching this on YouTube, and if you are, please, if you like it, click on that like, subscribe, click on the bell. You'll be notified in real time when new things are coming in. And of course, if you missed the webinar, don't stress. You can just go to our channel and find it and watch it at your convenient time. And another thing, sometimes I see feedbacks from you, and I appreciate it if you make an effort and write your thoughts, good or bad or anything. I'm here to improve things and create the best possible webinars here, so we all could benefit from that. Okay, so before we go to analyzing things, just a few words about the week that just passed. It was a short week, as you know. Friday is a Good Friday. The markets were closed, and now Monday, all the European markets are closed as well. US market is reopening normally, so we're starting a normal week for the US market, but most of the Europe will be closed for bank holiday, and excuse me. So it's going to be also not a regular Monday, but starting Tuesday, everything comes back to normal. So we had a few numbers out. We had some Feds speaking. We had also Powell speaking on Friday. It looks like the Feds are still on course, and in the middle of the week, I think the Fed, Walsh, I think his last name is, he created a little bit of the sell-off by saying that there's no rush to start cutting the rates, and the market took it as negative. In general, we'll take a look at the markets, what happened last week. We'll talk about the Magnificent Seven. This is how they call this, 7 major tech stocks, the leading stocks. We'll talk about, we'll take a look through banking stocks. We'll take a look at oil stocks and a few others. Also, commodities. We'll take a look at oil, natural gas, gold, copper, cocoa, which is the champion markets as far as the gain percentage. We'll talk about Forex. We'll take a look through Forex or currency pairs, and we'll finish with just taking a quick look at Bitcoin. Okay, let's start. So I just took a screenshot here from Barron's. And I'll just read it together. Apple dealt with several challenges this quarter, which showed in the performance of its stock. Recent struggles include, but not limited to, slowing iPhone sales in China, a new antitrust lawsuit, and worries that the company is falling behind the artificial intelligence frenzy. All of that has weighed heavily on Apple shares, which have fallen 11% this year, notching their third worst quarter in the past 5 years, according to Dow Jones market data. And here they give you a comparison. By the way, if you remember this, when China they banned the official or government offices from using iPhones, and things are not getting any better with this wars between China and US as they are banning products from each other. So they give comparison. For comparison, the rest of so-called magnificent seven stocks have generally performed better than better, with Alphabet up 8.1%, Amazon rising 19%, Meta climbing 37%, Microsoft gained 12%, and Nvidia soaring 82%. Tesla, however, has tumbled 29% amid struggles with competition and slowing demand. And together, the S&Ps has aged 10% higher. Up next for Apple, they're asking. Investors will be watching the 2024 edition of its annual Worldwide Developers Conference, or WWDC, from June 10th to June 14th to see what the tech giant has been cooking up. So this is the Apple stock, as you could see from the beginning of the year. We started selling, then we had a brand new high. And since all the China issues and slowing of the iPhone sales and everything else, the stock's been struggling. Okay. Now, I researched a little bit and I found the ETF. I don't think we offer it yet, but you can just find it on any third-party providers just to track these stocks. So that's ETF that tracking all those magnificent seven stocks. And as you could see for the past 3 days, after making all-time high at $40, 40.02, we went down for the 3 consecutive sessions and closing at 39.15. So that's something if you'd like to watch it as a group. Here comes Nvidia. As you know, it's a golden rush in the AI business, and Nvidia is being a leading company providing the hardware for those businesses. And here we go. We hit the 974 a few weeks back, and this past week we hit the high of 967.66, coming out of 850. And the last consecutive days we had 2 days of sell-off, pretty strong sell-off, and then Friday was we closed at 903.56. As if you can see this big sell-off here on the high volume from the highs, it happened to have a high volume here, the highest in a long time. So that was the reaction here. Here we tried this week, I believe this is Friday, Thursday, Wednesday. On Tuesday, we tried to reach those highs. We hit 967.66. We were shy, what's it, $7, $7.50. And then the next 2 days was sold. So we'll be watching this week how things are happening. We'll take a look at the economic calendar and try to find out what's happening. Also, 10-year yields, as I mentioned to you, this channel between 420 and 432 was still there after hitting the highs that we came back. So that definitely affects the US dollar and the gold. Gold is a separate story. I will talk more about gold. And it looks like US dollar is kind of stable around these levels. When we get there, we'll take a look. So this is 10-year yields, important to watch what's happening. Okay, let's go to economic calendar and a few words, especially to new people, about the economic calendar. First of all, it's a public information. It's being posted. You can find it on our web trader or the mobile app on the phone. Also, a lot of providers providing it from the same sources. What I do here, I get only high impact events. The times that I'm showing here, those are GMT times. So again, we can argue it's important to use it or not. Uh, Everybody has their own opinion on that, but I still strongly believe that even if you're not using these things and not really going through the details, just knowing that certain things are happening, it's very, very important. For instance, this week, if you just browse through it, you have Fed Powell speaks. So you know if he speaks, if you've been trading for at least a year or a few months or a few years, whatever it is, you know when Powell speaks, market really gets stormy. We have waves up and down, so volatility increases. And from that point of view, it's very, very important to know ahead of time that certain things are happening so you're in control. It's all about planning. You can get out of your trades, you can get into your trades, you can stay away, whatever you'd like to do. But knowing the certain things are happening is very important. Like the highlight of this week, you have the NFP numbers, and usually around those numbers, when they come out, you see a lot of volatility in equity markets, in US dollar and currencies connected to it, and of course gold as well. Okay, so let's go through them really, really quickly. You see all the gray things. That's what I'm mentioning. Actually, as you could see here in Europe, they have a daylight saving time shift over the weekend. Switzerland, European Union, I guess, UK. Then we have a manufacturing PMI already came out, higher than expected from China. And as I mentioned to you, all the Europe is closed, bank holidays through all the Europe. New Zealand, Australia as well, Switzerland, French, German, Italian, all the banks, UK banks are closed. Then we have from US, we have manufacturing PMI. On Tuesday, excuse me, you have CPI numbers from Germany. You have jobs opening from US. And we have the ADP numbers. Some of you might know this is kind of a pre-NFP numbers, different agency reporting how many jobs were added. So sometimes it gives us a little bit of an idea of how the non-farm payroll will be showing. Not always matching, not always accurate, of course. Service PMI from US, as we mentioned, Powell speaking on Wednesday. China bank holiday on Thursday, CPI numbers from Switzerland, unemployment claims from US, and here comes Friday, another bank holiday in China. And here comes the employment data with the NFPs and unemployment and everything from US and Canada as well. Sometimes they do it together, other times not. This time, US and Canadian numbers with employment and unemployment data coming in on Friday. Usually, again, for new people, usually it's the first Friday of the month the report comes out. And it's considered to be one of the most important announcements or report of the month. And we have New Zealand and Australia catching up. Next weekend, they're switching to the daylight savings. Okay, so let's move now to the trading platform. And we'll start with indices. As usually, we'll start with China. As you could see here, we mentioned between 12,100 and 12,300. We've been sitting there accumulating after this nice recovery. Of course, two things can happen. We can move higher here, break out of this. To be precise, the high here was 12,277 and a half. If we could break through it, I don't know if that's going to be, it's tricky because if they decide to move the market higher, this accumulation went for quite a while. Let's see the weekly chart. Yeah, about 3 weeks accumulation, as you could see on the weekly chart. So we could see the impulse because it would be triggered by new buyers coming in and short sellers covering their positions. So we might see the impulse here, or we can break, close higher, and then the healthy way of continuing it would be building up some support above this level of 12,272, and then getting ready for next. So it's either impulse up, build up and higher, or it could be a fake breakout without any impulse, and we can dip back into the channel, and it could be even selling. Or a sell scenario, we could be below, start trading below 12,100, building resistance around here. As of now, we are above the 200 moving average. 50 moving average is catching up with it, so it looks kind of strong. That's just to remind us, the economy in China is not doing that great. They have a lot of issues with real estate. Last week, there were some articles that real estate issues are kind of starting to affect the banks. That's a little scary. That reminds me of what happened in the States of 2008 and what caused global collapse in a way. So let's see how that works out. And of course, with China, I usually bring up four instruments. That's the crude oil, copper, and two so-called commodity currencies. So let's take a quick look through them. Crude oil has been up. We'll talk when we get to analyze all the commodities. Copper has been selling. We came back to support and bounce from it. And Australian and New Zealand dollar. Australian dollar is holding here, but New Zealand dollar is continuing its weakness, as you could see this past week. Okay, so that's China. Japanese market, it's been strong, making the highs here. We did establish nice support after breaking through a recent resistance. Weakness of yen that continues also supporting this move. So as long as we're holding about this level around 40,290, we could be aiming for breaking the highs. And of course, if the opposite happens, if we dip below that 42.90 and start building the resistance, excuse me, we might see correction coming in. All right, so that's Asia. In Europe, Germany has been very, very strong. It's continuing higher on the vertical. Friday, we had a little bit of a red day, but we're still on the highs. UK, as we mentioned last week, is catching up, and it's on the way to retest the all-time highs. We spoke about it a few times here when the whole global markets were making all-time highs, and UK was kind of holding here. But on the excitement that Bank of England might be cutting rates sometime soon, I think that's what triggered this excitement. Finally, we moved high, and we're very close to all-time highs here. As you could see here, February, we hit February of last year, we hit the high of 8,020. We're about 22.5 points away from that level. Okay, so it could be this week we can touch that level and see what happens there. US indices, as we mentioned, they were selling a little bit. Nasdaq was selling on Friday, but Dow Jones pretty much a flat day, as you could see here. US 500, S&P 500 as well. We're challenging the all-time highs. We closed flat on Thursday, right? Friday the market was closed. So the high here, or the open and close, open was 53.03, close was 53.03 and 3/4, so less than a point higher. That's kind of funny. And you have Nasdaq. We did close lower, as we will take a look through the tech stocks and we'll see how there's some of them sold on Friday. So that's the indices. Again, Friday the market was closed. It was a short weekend. Coming tomorrow, only US market is open. I think Asia as well. European and New Zealand, Australian banks, or it's a bank holiday. The local markets are closed. So let's move to equity markets, to individual shares. And I just want to go through the magnificent seven. Wow, it's hard for me to pronounce that word for some reason. Okay, so here comes Apple. It did have towards the week we did bounce of this 170 levels. We closed at 170, 176. Amazon, we're still not at all-time highs on Amazon, but we are strong. But as you can see, a lot of choppy trading, a lot of big tails here. Google or Alphabet as well, we had a nice recovery here, and we are not at all-time highs. We closed at 150.86. Microsoft, I don't know if it's still number one. It was around here. After making all-time highs this past week, we've been selling. Monday, Tuesday, Wednesday, and Thursday was a little bit of a green day. So we're still looking strong on Microsoft. We are holding, the matter of fact, above this initial, not the initial, but the recent high from which we had the correction. So the high was 420.54. You know what? So let's set it up. 420.54. Okay. So as you could see here, now it makes sense. We did stop this move. That was back on February 9th. We had a correction to the downside. We came back, moved above, then below again, then above, and now we're holding and on that 420 level exactly. So let's see what this week brings to Microsoft. Meta as well, it's coming to the recent support after making a lower high this past week. Tesla is struggling. We did have a nice correction here for two reasons. I don't know if that was last week, if you mentioned it, but two reasons. They lowered the prices for their cars in the US and Europe. And also they started, I think, starting last week, this self-driving software that they charge money for. They start giving people 1 month a free trial. So that kind of created this gap up here, those two factors. And then we just sold. So we closed at 175.79. Let's see what happens there. Intel caught my attention. The last few days, the tech market was selling and Intel was actually going higher. Take a look. After breaking through the previous support, but the whole week moved to the upside with a nice gap up on Wednesday, I believe on the 27th, and then again. So we are technically above all three moving average, 200, 100, and 50. Something's happening in Intel. As just to give you, for example, the Microsoft was selling and Intel is going against the trend the last few days. So as I mentioned, sometimes it's important to spot this relative strength ideas when the market is going down and a certain stock is going higher. That means if the market gets strong, the stock could be the first one continuing to the upside, right? So let's take a look. Another strong stock was Disney. It's been continuing higher since I think it was triggered on the last announcement of the earnings, and the stock is continuing higher. Let's see, technically we are approaching the 200 moving average shortly, and we are here trying to test the resistance of 123.16. So we are about that level. So we'll be watching Disney. Another one that we've been talking about a lot, that's Teva Pharmaceuticals. It's slowly continuing higher. On Thursday, it was a little correction here, and we're slowly moving. Just to remind us, we've been talking about this stock a lot. as a short-term or mid-term or long-term investment. It's been coming from below 7, and some analysts way out of 14. As you could see here, the resistance here was 1374, talking about 4 years ago, February 2020. And some analysts that we spoke about a few weeks back, some analysts set up a price target of 19. And as we mentioned, it makes sense. We're coming out of 20 here when the sell-off increased. So that's Teva. Okay, those are the equity markets, and now we're going to move to commodities. And as we mentioned, let's start from gold. Actually, gold's been super strong, and I just watched a report where one of the analysts was kind of explaining why gold's going higher. Whoever was interviewing him is asked a question: how come if the market is going high? I mean, gold is a safe haven, usually goes up on the market selling, but the market's been doing all-time highs. So he explained that it's been a lot of buying of physical gold as well. A lot of central banks are buying gold. He mentioned that India just in January or beginning of the year bought a lot of gold, and a lot of world central banks are purchasing gold as protection from inflation. So as you see here, we've been making all-time highs on gold. We did close at 2232.76, making the all-time high this past week. So somebody is buying gold, and it's both physical, of course, the electronic gold is being bought as well here. Who knows, maybe it's hedging against inflation. Also, it got more intense when we heard that the Feds are not in such rush to start cutting the rates. Maybe that trigger gold as well. Let's see. I'm drawing now the trend line here, connecting the previous two highs. So we're going to leave that line on, see what happens when gold hits that line there. So that's your gold. Let's see how this week plays for it. Now, crude oil has been strong as well. We are breaking out of this resistance around these levels here, around 83. Few things are happening around gold. One of the JP Morgan strategists is explaining it, that demand is growing on one side and it's being driven by high consumer spending. You know, more consumers buying, more oil is being used for simple reason. Delivery trucks are using the gas or whatever, the oil products, which is kind of weird. UPS, which just had last week, was a drop on the stock. Again, I'm just comparing things logically. In any event, what the strategist was saying, that the high consumer spending is driving the price of oil higher. Also on the supply side, Russia in March, they announced that they're cutting the daily production by 471,000 barrels a day. So that's also hitting the supply. So when you have a strong demand and fear of short supply, I guess the buying triggers. Let's see if we continue this upcoming week. Natural gas. We are holding this 171 area. After a lot of accumulation here, this is the new contract was high, of course, and we did close the gap. Sometimes it happens between two contracts, and we are holding. So I ask myself a question: what's been happening seasonally in natural gas? And take a look. If you look back, I'm just trying to play with my mind and think, okay, what happened around this time in the past years? So here, March of 2020, we had the move up, and then starting from July was a big move to the upside. Of course, that was related, I guess, to certain reasons. Then we had this move up around February, March, that was connected to the war when Russia came into Ukraine. So that was kind of tricky. But going back, if you can see here, 2016, February, March triggered the buying here. And then March of 2012, it was a sell-off that stopped around there. And starting April, we start going high here. So again, it could be that similar situation will come now. Also, as you could see visually here, we have a triple. This is the monthly chart, by the way. Each candle represents a month. So here, 2016, we bounce up. The big move started April of 2020. I guess that was the pandemic, right? The COVID could be. Wow. And we back to those levels, and it looks like it's a similar interval in time. Wow, that's interesting. 2016 to 2020, 4 years. 4 years, and then another 4 years exactly with the same level. Some traders, especially commodity traders, they look into these cycles and seasonals. Again, it could be that we might trigger a buying situation here as well. So it's worth watching it. And of course, if we break through this 170, the recent low was at 152. We might be going retesting that. So that's just an observation on natural gas. Palladium is also holding these levels here after bouncing off the 200 moving average here. And let's see if we manage to continue that move. We are about that 950 key level that we mentioned a few times. We stopped here, we bounced from here again. A lot of actions around 950. Let's see how things will play out. And we'll wrap it up with our cocoa, which is up 240% this year. That's crazy. Okay, so cocoa had few corrections followed by new highs. And now we had down day after breaking. We've rejected the 10,000. Okay, then we had gap down and recovery. And then the last trading day, we had the red day. So it's very simply this recent high of 10,075. It's our all-time, I don't know if it's all-time, but at least for a few decades. That's our resistance here, 1075. And let's see what happens. So I would take this low of, I guess it's Wednesday. I would take a Wednesday slow as immediate support, 92.64, and see if we are managed to hold that level. At least now we have an indication. We have the recent high, and we have a level from which we bounced after a gap down. So that's our cocoa. All right, let's move to Forex. We start with dollar index. As we said, judging by 10-year yield, dollar should be stable, and it is. Our level of 104.15 that we mentioned many times, support to turn into resistance, resistance again, a lot of actions here, sell off from here, resistance. We are above 104.15 now, and the 10-year yields are around 420. So let's see how this week plays. Again, we have NFP numbers coming. We have Powell speaking. It's also something to digest through the recent announcements and inflation numbers from past week. So let's see how we start Monday with reactions on the dollar. If we are holding this 104.15, there's a chance of moving higher, and that would be challenging this recent 104.83 level. If we're dipping below again, we could be going lower. And just to mention here, I think I mentioned last week that something they call golden cross is in play. That's where the technicals or the technical analysts are paying attention to these things as a buy signal in this case. And when it crosses below, it's a sell signal. So something also to keep in mind. So that brings us to pound and euro. That makes sense. Pound is back glued to that 126 level. Euro should be around 108. These are the levels when dollar stays at the current levels. Dollar yen is flat here after breaking through, I think, 36-year high or something. We are at 151.35. USD CAD sold due to the oil move to the upside. We did close below the 200 moving average again, especially for new people. One of the things the trader watch when trading Canadian dollars, the oil prices, as Canadian dollar is very sensitive and correlates to the oil prices, as Canada is one of the producers of oil. So we spoke about Australian and New Zealand. Australian is sitting right here at 0.65 around that level. NZD broke below 0.60. That was the level that was significant. And among the currencies, again, New Zealand dollar remains the weakest against not just the dollar, but against other currencies as well. USD CHF, after this move up on the surprise interest rate cut from a Swiss National Bank, we had a little bit of a correction on the Swiss franc. Now on yen. Yen has been strong against Australian. It's been weak against Canadian. Again on the oil moving higher. Euro has been weak against the yen. Pound is at the very serious level here around 191. We did break through it in the past week, and then we came right back to this 191 key level, and we are holding there again. Just to remind us that recently, the Bank of Japan finally moved away from negative rates. Now it's at 0, and Japan started the new fiscal year as of April, and some are expecting further moves in increasing the rates. It could be happening, and when or if and when it happens, we could see a move on the yen. As of now, we are watching the yen on the further continuation of that possible strength. Because yen has been at the historical lows, again, just to show us, again, the dollar yen. This was November. When we hit the current levels, we did sell significantly, coming to below 140. And then we had a move up, correction, and retesting the highs again. So we'll be watching that yen, and we'll be watching also Swiss franc, as you could see. Swiss franc against the yen as well. We've been talking a lot about this pair. We did come to 200 moving average, and it looks like we're holding it. It was a pretty significant move. We came from 170 and a half to 166 and a half, so about 400 points in about 2 weeks, 400 pips. Okay. And let's take a look at Bitcoin. Also had quite a journey after the recent sell-off, after making all-time highs at 73, almost 74,000. We did come to the low of 61 and a half, and then on the 20th of March, we did spike below, went to 60,759, and had a strong move that erased the previous day's loss. And we are trading now between 69 and 71,000. Currently we're at 70, almost 70 and a half. So we know the FTX ex-CEO was sentenced to 25 years in prison. I think the company is selling now 222 million worth of real estate properties that he owned to cover or to pay out people that lost the money. In any event, he goes to jail. Bitcoin is running. The ETFs are doing good. Let's see what happens this upcoming week in crypto world. All right. So again, put it all together. We have a big week. We have NFPs. We have Powell's speech. We have other data. At the same time, it's a shorter week. We have Monday. It looks like only U.S. market is open, maybe China and Japan as well. I'm not sure, but all the European markets are closed. Also, Australian and New Zealand looks like it also will be closed. We have the announcements. We have NFPs on focus, and it's going to be an interesting week. Don't forget to switch your clocks if you are switching this weekend or next weekend. I want to wish everyone a good weekend. Still, we have some left, and get some energy, as I always say. Get excited about the week. Plan your week. Have a plan, and trade your plan. All the best. Take care.